Hello and welcome to the Fletcher Friday Report. Today is Friday, June 5th, 2026. The Fletcher Friday Report is a look at the performance of the Fletcher algorithm, comparing it to the S&P, and just a way to look at performance for the week, the month, the year. No signals, no actions, just info today. Fletcher is an algorithm I built. I was looking for a way to outperform the S&P rather than trying to use my own feelings and the market sentiment. Fletcher follows a number of rules that provide 3 to 6 stock picks, buy, sell, hold signals, and this happens monthly through a monthly subscription. I'm just an individual investor. I'm not a financial planner or advisor, so this information is not advice. It's simply information to share with you. What a week on the market. Friday turned out to be a big reset, and if you're like me, you saw your portfolio give up a lot. Fletcher gave up a fair amount. My other investments gave up a fair amount. It'll be interesting to see what all the news is over the weekend and what the sentiment is come Monday morning. In my opinion, it's a reset that was well overdue. We've seen such huge gains. In fact, my brother and I talk a lot, and I was telling him I was kind of nauseous when we were going up so quick. It's kind of that anticipation like a roller coaster of what's going to be over the hill. Today was an indicator, I suspect, that there needed to be a little bit of a reset, set a new basis. I'm not technically inclined, so I don't know how to answer that specifically. I do know that some of the news about jobs was playing into this. There's some headlines that I was kind of reading through, and some of it sounds overstated and hyperbolic. And what I like to look at is just say, okay, well, given that headline, what's my opinion? The Bloomberg had a headline, Wall Street's historic weekly run comes to a halt as tech sell-off and higher bond yields hit stocks. Okay, I can agree with that, I guess. Didn't we know that was coming at some level, though, as hot as the market's been running? Another headline from the street, NASDAQ falls 4% as semiconductor slide wipes out $1 trillion from the markets. I'm curious what it added to the market in the last 2 to 3 months. Maybe $1 trillion is just a fraction of that. I don't know. What do you know? I could probably look it up. But all that to say is that we're basically back where we were the beginning of May, perhaps. So it's not as though we gave up 6 months of gains. NASDAQ, S&P 500 suffer worst day of the year as AI stocks tumble and Fed rate hike odds rise. Worst day ever sounds so dire. Should we even react to that or just be like, okay, yeah, technically it was the worst day, but if you look at the last month or two, it's not as though we gave up a whole lot. Let's talk about Fletcher this week. Monday, being June 1, Fletcher actually sent out signals. And so there was some buy, hold, sell that happened on Monday. It's kind of a bummer that it happened at the beginning of the week. We may have had some advantages to do that on Friday, but who knows? That's where I don't try to second guess Fletcher. I just follow the algorithm. And at the same time, 1 week is never a sufficient amount of time to judge Fletcher, and I would argue to judge a lot of things. So let's look at what happened with the numbers. Fletcher this week had a pullback of 9%. S&P had negative 3%. For the year to date, Fletcher took a pretty good hit from last week. 169 is where we sat last Friday. Today, we're sitting at 144% return year to date for Fletcher. At 144, I'm still happy. So giving up that large percentage does hurt a little bit. It's hard to see, but at the same time, I'm trying to keep things in perspective, especially compared to the S&P being at 8% currently. As you know, I like to answer some questions that come up during the week. And with this week being so volatile, especially at least today, the question is Fletcher tech heavy? The answer is currently Fletcher is tech heavy. That's where a lot of the movement has been and the opportunity. So Fletcher keys off of that. At the same time, it's important to understand that Fletcher is industry agnostic. There might be times where Fletcher is signaling a financial stock, or it might be a consumer stock. It might be an energy stock. So the opportunities currently are concentrated in Fletcher and have been for the last few months. However, when you look at back testing, you'll see that it's all over the board. Another question that's come up recently has been, is Fletcher best in a retirement account or just in a normal taxable account? Because the way Fletcher sends signals each month, you end up with a fair amount of capital gains that are going to hit short term. At the same time, I mentioned last week that 1 out of 3 of Fletcher's picks do show negative. So you are able to take advantage of some losses as far as offsetting capital gains. But in a perfect world, I would have every bit of my Fletcher investments in a Roth. Unfortunately for me, I have things spread across multiple accounts just because of the way my assets are allocated. Something to point out regarding Fletcher's signals and relative to capital gains, sometimes Fletcher will have a stock in the hold position for a number of months at a time. I've not seen one go past 6 months, but oftentimes 3, 4, 5 months, keeping those gains in place before selling. This puts another week on the books for Fletcher. I wish I could say it was a positive week, but we did see a pullback. Thank you for listening today. Let me know what questions you may have. And to learn more about Fletcher and the algorithm, visit FletcherInvestor.com. Have a great week, and let's connect again next Friday.